Hey everybody, it's the 10 Mil Club meeting for the week, and here we are. This is going to be a relatively quick meeting. Market really just kind of stinks right now, and it's kind of rolling over. And if you've noticed in the text chain, we've sold off some stuff, and so really, I just kind of wanted to just kind of go over what it is we have and not take too terribly much of your time. So let's get right to it. All right. I'm not going to go through a ton of different things. I'm really going to kind of get right to it. This is the percent of S&P 500 companies trading above their 200-day average, and this is a year of them I'm showing. As you can see, it can get a lot worse. Back during the tariff scare, which was April of last year, we're getting on toward a year from then, it's a lot lower. The low is quite often 30% or less. We aren't there right now. We are somewhere around 47 to 48% of S&P 500 companies trading above their 200-day average. But you can see how it's down. The market's power certainly is down. And if I go to the S&P 500 itself, here's a year of it. You can see it climb, 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 and then turn, and then you can just see it kind of just trailing off. We are now below the 50-day moving average, and we're meeting up here pretty quick with the 200-day moving average. There are a lot of stocks we watch that aren't S&P 500 stocks. That's true. But the S&P 500 drives a lot of the capital of the market, and so that's what we're watching. I'm going to get straight to what we did this past week, and then what we still own, and then I'll be done. This really isn't going to take all that long. Truth of the matter is, sometimes the goal is just to simply fight another day, and this kind of feels like that time. And so here's what we did. We kind of began the week by selling out. I believe we sold Bank of New York Mellon this week. Bank of New York Mellon had crossed below. It hit our stop at 113. Now, the truth of the matter is, I'm going to go with 6 months here. All right. Truth of the matter is, it's rebounded a bit since then, but it's still below this downtrend line. And the banking sector is just not doing great at the moment. So we're kind of holding out. We could have held out for a little bit of price, I guess, but I believe we pulled the plug on that before we hit our stop. But anyway, there we are. We started out the week by selling Bank of New York Mellon, BK. And then I believe we got stopped out of Expedia, which Expedia stopped us out here. So we were playing this move in Expedia here, and we bought it at 248.15, and then we finally just sold it at 229 because it was coming down, and it's actually down below there. It's turning at the bottom of the channel, and it has really low volume at the moment. We'll see where that goes, but at the moment we're out of Expedia. We then sold Procter & Gamble. Procter & Gamble had run to this point. We picked them up at 165. They rolled over, and finally we just sold them at 158, and then picked them back up at 155 and sold them at 151. So we have yet to make any money off Procter & Gamble, and down it is. So this is why we're sitting on our hands a lot. ServiceNow, we probably got a little aggressive in buying because it really hasn't been a great chart. Like if you look at, we have a year of downward momentum, and then we bought it when it crossed this line and looked like it might actually be going up with higher volume, and that didn't work out either. We actually bought it at 122.75, sold it at 113.27, and sometimes it's how life goes. We bought Netflix at 99.08, and it rolled over. Now Netflix is an interesting chart because it rolled over, and then on Thursday and Friday we kind of got a hold on sort of situation where the volume is lower, but the price really didn't even. It was actually up $1 on Friday when the market was down. So that's something we're keeping an eye on. We would need a resumption of the upward trend, but we're at the moment we're pulling plugs faster than we're actually getting into things. And then we sold Gillette Satellite for a pretty tidy percentage. If you look at it here, we'll go back to 6 months. Gillette has a tendency to run up and then hit a volatility area and then drop off, go up, hit a volatility area and drop off. And we saw it go up and hit that volatility, and the market was just dropping off. So we took our profits, and I don't remember precisely how much it was. Laura Sue will get on me because it's in the waterfall. We took a profit on that one. Bought the first installment at $14.70, the second at $16.40, and finally sold the whole thing at $17.11. So we did not take a beating on that one. And that was the weekend sales. As for what we own right now, I'm gonna sort it by alphabetical ticker symbol. We still own Car Gurus. Car Gurus, we are currently down 3.86% on. We bought it after this shakeout day here and rode it up to this point right here. And we took heart because it broke above its 50-day moving average. And then it's just done what the entire rest of the market's done. Now, it slowed its descent in the last few days too. And our stop's all the way down here. So we're going to see how that works out. I believe we're going to hang on to Car Gurus. I don't see us selling that. Coupang, CP&G, we're actually up just a slight touch on. It, interestingly, hasn't been beaten as bad as some of the other stocks that are out there. We're up just a little bit on it. Unless it just resumes its march downward, we'll probably hold on to it for another week. Still have the CTO preferreds in Dad's account and his public storage. Don't know if you hold any of those. Now, Fox, this is going to mean something. I wish I was a better chart reader. That has a wick that's really wide, but a body that's only that wide and a lot of volume. That could be, I don't know that that's a distribution day. It's a Friday, so Fridays are kind of weird, but a lot of volatility, closing down, but with a lot of volume. We'll keep an eye on Fox on Monday and Tuesday, and if it does another couple of moves down, we'll probably sell it. And then TJ Maxx, TJX. Now TJ Maxx is such a good stock. I mean, we're up 2.5%. We were up considerably more, but TJ Maxx is one of those things that just, I mean, it screens so well that we would have to be shown by the technicals that we need to not be in TJ Maxx. But for right now, TJ Maxx it is. We're only at the bottom of the channel, and that's where we're kind of going to stay with TJ Maxx. I'm well aware. Okay, let's see. I'm not going to run the whole 2026 portfolio list because everything on that list, 9 out of 10 stocks are down. There are just a few I want to hit. Sunoco Products Company. We sold. It ran and ran and ran and ran. Went up here, and it hit this line. It sold, and it's turned right here. I probably can get rid of the Fibonacci's here. There you go. It followed this line down and then has turned at this line. Now on Friday, Laura Sue and I talked briefly about buying some more, about buying back into Sunoco. We could have bought into it at about 53.45 or so a little bit less than the 53.70 that we sold it for. But the problem is the market is so weighed down right now that we were like, what we don't want to do is have retail folks be buying it right through here and have there not be enough capital for it to really continue its upward move and just go right off like this and get stopped out again. So we did not buy back into it, though we may, if it crosses this line and continues, we will get back into it because I think it has a lot of upside. It's just a matter of where it's going in the next little bit. So that one we don't own, but we really should be watching. Yum Foods actually has turned and was up on Friday. And Mark Minervini will tell you that one of his best techniques is to try to find stocks that are up on down days because they're some of his best performers. I could totally see Yum Foods being that way because it broke that line and is now kind of working on going up. It was up $1.94 just on Friday. So we're watching Yum Foods. And then Walmart was also up $1.19, and it's broken its line right here too. So those are the three we're watching going into the week: is Walmart, Yum Foods, and Sunoco Products Company, because they look like they may actually be decent investments for a bad economy. So I know that was like only 11 and a half minutes, but that's all I really have to discuss this week. It's quick. The market's just rolling over, and breadth is kind of, I know I didn't show any breadth measures here, but breadth is kind of letting off and emptying out. And so that's all I really have to talk about is just a few stocks. Anything else comes up, I'll certainly let you know through the text chain. So, all right. I don't know if you want to watch my FUBU penny stock segments. I did 2 segments on FUBO, and I don't know. Be interesting to see. There's a lot of deeper analysis in it, and I think my next one is going to be Ross Stores, ROST, because Laura Sue wanted me to do that one, and so I think that's what I'm going to do. I hope y'all have a really good week, despite what the stock market throws at you. The stock market just hasn't been happy, and the Iran war, I think, has really just kind of given the markets a reason to sell off. They were so high, and we've shown over and over again the S&P 500's valuation to GDP and how high it is. And I think the markets were kind of looking for a reason to sell off, and so they're kind of rolling over. And until I see some improvement, I'm probably going to be doing only some defensive buying sort of thing at most, and probably closing some positions, so we'll see. All right. I hope y'all have a really good week.